In a growing economy like India, one of the most lucrative modes of investment is in the share market. Some of us start off as big bulls and end up as slow bears. I'm definitely not going to be talking about what shares to invest or what mutual funds to invest in, but I'm going to be telling you about the tax implications on different types of share transactions. I'm Yashwan Nijgal, a chartered accountant in practice. Every week, I post one video which will certainly provide you with valuable financial insights. So we can classify the transactions in the share market into three major categories. One would be where you have actual delivery of shares and you either end up with short-term capital gain loss or long-term capital gain loss. The second category would be an intraday transaction where there is no actual delivery of shares. And the third category would be the derivatives, which is the futures and options. Let me start off with the first category, which is short-term or long-term capital gain or loss, where there is actual delivery of shares. The long-term capital gain will be applicable if the shares are held for more than 12 months, and the tax rate applicable would be 10% without indexation. And the short-term capital gain would be for shares or equity-oriented mutual funds which are held for less than 12 months, and the rate applicable would be 15%. And keep in mind that this is applicable only for shares which are listed on a stock exchange in India, and the STT, which is basically security transaction tax, is paid on these transactions. So the second category, as I have already explained, is the intraday transactions, where there is no actual delivery of shares, meaning you buy the shares in the morning and before the market session ends, you actually sell the shares, and this is called as an intraday transaction. So this would be considered as something called as speculative transaction or speculative business income, and this is a separate category wherein you will have to pay taxes on income as per the tax slabs applicable to you. Keep in mind that if you incur losses while indulging in intraday transactions, which is also called as speculative losses, you can set off these losses only against income from speculative business. The third category and the last category would be the futures and options or derivatives. This is actually the most advantageous one, as any income from F&O transaction will be considered as business income, and if you incur losses from F&O transaction, it will be considered as a business loss. Now, what is the advantage? If it is a business loss, you can set off this business loss against any other head of income except income under the head salaries. And make sure that if there are losses which are not set off in a particular financial year, you carry forward the same to the next financial year and set off against the income in the next financial year. Do you really have to break your head in worrying about what kind of transactions you have traded in on the stock market? Not really. All you have to do is download something called as the tax P&L from the stockbroker, whether it is Zerodha or Upstocks or Kuvera or the likes, and you will have separate categories of these transactions, which is F&O, intraday, and your standard short-term or long-term capital gain transactions. This way, you will have a very clear understanding of the different types of transactions, and make sure that you declare these transactions under the respective category and not merge all of them together and declare it in one place. So many of the clients who come to me don't disclose the fact that they have transactions on the share market unless I specifically ask them. Keep in mind that all the transactions that you have done on any of the stock market will be captured in the AIS, which is also called as the Annual Information System. And if you don't declare them, there is going to be a very high possibility of a scrutiny at a later stage, and you will end up paying penalty or interest for non-disclosure of income, or you will lose the opportunity of claiming losses and setting off at a later stage. And as always, no tricks, no hacks. Follow me for valuable financial insights.